Checkity check check. Checkity check. What's up, everybody? Welcome to the channel. We're gonna take a look at some things. We're gonna try to trade some stuff. Be warned, the internet speeds are giving me a little bit of trouble here this morning. I don't understand what's going on. We're working with that, so just bear with me. Download speeds are fantastic. It's the upload speeds that struggle when you're trying to run a stream. Maybe it'll pick up here in a minute. So, yesterday, Fartcoin gave us an absolute perfect short setup. It traded up to the previous 4-hour swing high. This was the current high of day. We liquidated the high of day and then fell back under. Once we fell back under, we initiated a short position. And as you can see, that ended up working out pretty good. I was under positioned, so that was my fault. So we'll see what happens, but obviously that trade got stopped out anyways. Obviously that trade got stopped out because Fartcoin bounced at last week's low. It had trouble finding downside continuation beyond that point. Over here on Bitcoin, what we've done so far is not good. We are back to red on the year. We traded down to January 2025's low. So the very beginning of the year when we set the January low, that's the level we are slightly bouncing from. Bitcoin set the tone pretty early yesterday going into the New York session. As you can see on my monitor, we dropped below the VWAP and then lost the week open. And once that occurred, you traded up back into the weekly open and dropped. And it was pretty much downside for the rest of the day. Not very severe, huge downside pressure or anything like that. It was actually pretty slow and choppy for, a majority of the time until it did start to break down. And then once it did start to break down, it traded down a little bit. But here we are bouncing off the January 2025 low. It's not a big bounce to say the least. We've looked at the liquidity maps and a lot of other things. There's not a whole lot of liquidity down here. So we kind of assumed that Bitcoin would ultimately bounce from around $88,000. That's where the majority of the liquidity is. It spent so much time trading down there yesterday going into today's session, because right in through here is when you closed out the day. Then you started the Tuesday range, went down, set the low, and came back up. So because we spent a lot of time down here last night, there is more liquidity to liquidate now to the downside. Whenever you spend a whole lot of time, it gives people and traders time to put positions on. And yeah, this isn't the kind of bounce that I would want to see. If we go check the upside here, you can see that the VIX is currently gapping up today. So yesterday was a pretty nasty move lower on the S&P cash market. Here's yesterday's range, and today we are slightly gapping down. This is going to be the futures market here. We put this on the 30-minute chart. I don't know why that does that. That's so annoying. But yeah, a lot of sideways stuff here. We came into the drop at about 7:30 this morning, and it's kind of testing around the lows that we set last night during the Asian session. Ethereum's currently trading at intraday support. So basically what I'm going to be watching today for, if there is going to be a bounce here, if there is going to be a long opportunity, I think that long opportunity would be best taken on something like Fartcoin, simply because you're back above the weekly open and you're back above the weekly VWAP, which kind of, until price loses that area, it does kind of indicate that the volume is more delta skewed to the upside. That doesn't mean it will stay like that. It just means as of right now, it does kind of seem like that. So basically what I'm watching here on Fartcoin is if we could get a push down into like this level here, the 2474 area, I would love to be able to get long there, but it's going to be a little bit dangerous because the week open is further down. So we'll see what it does today. That's all we can do. That is literally it. That is all we can do. Yesterday wasn't a very profitable day. It was a profitable day, just not very profitable because under positioned. That's my fault. It's when you drop so low, you got to take a bigger position because the asset class itself is much cheaper down here. And that was where the issue laid or was. Hopefully everybody's having a fantastic week. Obviously, I know Bitcoin's selling off and it sucks. People that are holding Bitcoin long only, they're getting absolutely rectified here and they do not like it. I do not like it. Obviously, I've been short the whole way down, so it doesn't really matter to me, but it's for those other people out there that don't fully understand how to mitigate downside risk. Those people I feel for. And hopefully they will, learn more and start to operate the proper way in a market like this. But we'll see what happens today. It's pretty nasty out there. Risk markets are still just barely down. I do have this red line on the chart that indicates 30% down. As of right now, Bitcoin is trading under bear market territory. If you use 20% off the highs as your indication for a bear market, that is, with Bitcoin and me, I typically don't start to say that Bitcoin's in bear market territory until 30%. Because generally speaking, when Bitcoin is 30% down, you expect risk markets to be close to 15 or even 10% down, and we're just not seeing that right now. There's such a disconnect from normal risk markets. Now today's Tuesday, so could be a slower day because Nvidia has earnings tomorrow. So we might not see a whole lot. If we go out to the weekly time frame on Bitcoin, we have literally been trending lower since October. So 7 weeks you've been trending lower. This one little week right here was the only week in which you closed up on the week. But as you can see, you rejected the prior week's open. So that was a pretty bearish move, or at least when the new week opened and we liquidated both the previous 2 week highs, that's where the short trade was. And since then, you've been making lower lows and lower closes 4 weeks straight. And this week we opened up yesterday and went down. So already this week is looking rough. It is looking pretty rough. It's starting to get a little bit extended. If you look at your overbought and oversold indicator here, your RSI, relative strength index, on the daily time frame, you are setting at 27. Massively oversold. Not great. If we go out to the weekly time frame, you can see we lost the 40. This is traditionally where we wanted to see a bounce, because since 2023, every time Bitcoin traded down into this area, you can see right here is 2023. I'll go all the way out to the beginning of the year, right here. So we'll mark that. So basically from here on, anytime Bitcoin was testing into the 40 on the RSI, that was a bounce or at least a longer term buying op. Well, so far we blasted through that last week. This week, you're putting in downside continuation. Not great, not great. On the monthly chart, it's even worse because we were in a 4-month range up here on highs. Every time we got down to the low edge of the range, the buyers kicked up. We went back up and tested all-time highs again, but then ultimately it reversed. And this month, we broke out to the downside. So basically, we need to see demand show back up. Otherwise, it's just going to keep going down. I know there is demand, and I do know the further it goes lower, the more demand will come back into the market. But finding that area or finding that level to look for the bounce, that may be troublesome and could take a week or two to play out. So please, if you're trying to buy these dips, make sure you're not doing that with massive amounts of risk. Don't try to get cute and catch the absolute low. Play it safe. Do it the right way, and you will be just fine. Just fine. Okay, on another note, in the Forex market, we are currently watching the USD-JPY to see if it's going to roll over. We are up above the 786 of the yearly range, so that's typically not a good sign. Yearly open for the USD-JPY is up at 157, 155 on the yen. It's a big level. You do have topping formation up here right now, but we broke out of that topping formation. If you put a trend line from this high to that high, you're going to see that you're breaking out above that and you're seeing upside continuation. So here you go. Right there is that. We'll get rid of all this stuff real quick so you can see what it's doing. It's trying to put in an upside continuation move. So before I can get extremely bearish on the risk market as a whole, obviously I'm bearish on Bitcoin. We've been bearish on Bitcoin for over 3 weeks now. We've literally been taking shorts like crazy. But for me to get extremely bearish on all the markets as a whole, I want to see yen strength. As long as the yen is super weak like this, it's hard for me to think that there is going to even be a bear market in the NQ, NASDAQ, the S&P, the Russell, all those regular markets. So be careful. But with that being said, you are at, a level up here where at any point this thing could roll over. And if that were to happen, then obviously I would get a lot more bearish on the rest of the markets. But with that being said, as long as your VIX is elevated, where is it? Right there it is. As long as your VIX is elevated like this, you have to be defensively positioned. Have to be. Because this thing, it gapped up today. This is hedging activity. Because the VIX is up at 23 and risk markets are not even down 5%, this indicates heavy hedging activity. Super huge. It's crazy. The volatility index is exploding to the upside again, and risk markets are doing nothing about it. Here you go. There's your SPY. It's barely down, even pre-market. Pre-market, you're barely down 4%. That's unheard of. Unheard of with a VIX up at $23. It's just crazy times out there. Crazy times. So I do have a long-term put option on the S&P down at 6,100. So if it does roll over, that put option will end up paying. I do not like to buy puts when the VIX is elevated because you're paying a lot more in premium than you normally would. So generally when the all-time highs are being put in, that's really when you want to really start, thinking about putting on puts. Well, usually when that's taking place or in the past, the VIX would be down at like the 14, 13 level. But we were literally putting in all-time highs up here on Wednesday, October the 29th. And on the VIX on that same day, you're in the 1750s. It's crazy. So all-time highs, VIX should have been down here. That's not what we got going on. So a lot of hedging taking place here. We've seen billionaires been basically taking their money and just setting in cash, Warren Buffett especially, all year long. So obviously he thinks something is coming, or I'll just give it to you what the guy that's running Warren Buffett's fund right now, he literally said there just isn't anything worth buying out there. And we're seeing that take place in Bitcoin. People don't want to buy a very expensive Bitcoin, obviously. So it's rolling over. All right, we're getting ready to see the markets open up here and not really giving us a position. So Ethereum, once again, Bitcoin, my analysis, whenever I do the Bitcoin analysis, that's pretty much going to be the analysis crypto-wide. There will be caveats, specific assets will do specific things, but crypto-wide. Bitcoin, whatever Bitcoin is doing, most of the other cryptos are doing the exact same thing. The only reason we're looking at Fartcoin for the potential long is because it's got a setup. It's trading above the weekly open. It's trading above its weekly volume weighted average price. So it is the best candidate to look for long positions. Now it just needs to go down to a level that we can buy. I do not want to buy it up here next to day highs. It just doesn't make sense for me. Now, with that being said, it's only up 4.97% on the day. And we do know that if Fartcoin gets extremely bullish, it can go up into the 15s, 20% daily range. So there still is somewhat, of room for this thing to go. I just would much rather buy it at a support. It has literally done nothing since the London session. Literally done nothing. Here's your London session open. It put in the high, or, it tested resistance and rolled over, and it gave you literally just 1 hour of downside where it ultimately has been just holding support. So buying it at 25.05, it's just too risky because the week open is down here. So there might not be a setup. I'll leave it up to you to figure that out. Now, ZEC, it's rolling over. It's about time. We knew it was going to eventually, but unfortunately, it just wasn't an easy trade. I would love to take a short on it if it bounces here at the November VWAP again. Levels that I'm going to be paying attention to will be 635. If it gets back up there, I would be looking for a short on that. It's just way overcooked to the upside. And Bonk doing nothing here. Looks pretty much like Pingu also doing nothing. Weekly open up here. You're tagging or testing last week's low on Pingu right now. If in theory, if Fartcoin gets extremely bullish, it'll probably because Bitcoin and Ethereum are both going up today. If that occurs, I would want to basically be long Fartcoin. Ethereum's putting in the short right here. Like, this would be the area to look for shorts on Ethereum. You can see it hasn't tested it yet. It's working on trying to put in an upside run here. It did take out the previous 4-hour swing low, but it's bouncing from that area. So this is the range that we've been in, well, for the last 6 hours, right? 6 hours, you've done nothing. So very tight ranging conditions here this morning. If we go look at our session volume profiles, looks like they're trying to bid it up. It does look like they're trying to bid it up here. Fartcoin session volume profile looks almost identical with the POC point of control. Oh, the POC migrated up. Never mind. Point of control on Fartcoin was down here earlier. It has migrated up. So this is going to give the longs plenty of liquidity to run upside moves here. Yeah, I don't want to buy a breakout. I was hoping we would get the New York session open and we would run down to the weekly open first. However, if you still have a short side bias, this is the level that you're going to be watching for a rejection here on Ethereum. You're making fresh day highs right now. So if it is going to be another down day, remember the VIX is elevated. It could ultimately fall, but right now it's up. It's gapping up. It just seems to me like the sellers are getting a little bit. It's just so extended out there. S&P looks like it wants to retest the quarterly open from the top side. So I guess people just aren't interested. Anyways, to the top side here, quarterly open. That's going to be a big level to watch if you have a sell side bias on the S&P 500 today. That was the level that acted as support last week, and then again we got down in there. Here's last week or early into November, and then we bounced again there last week. So 2 times bounce, and then we broke back down through it here. So this is going to be the level to pay attention to. I think you probably don't want to be holding shorts if you're above that. But it could go so much higher though because of where the daily 21 EMA is. Yeah, it could bounce all the way back up to 67.55. But if it trades up to here and rejects, that's going to look a lot more like a short setup. So here is the entry for ETH shorts. If you have a short side bias on ETH, you're going to be setting your stop loss high day. Shorts are a little bit extended, so be careful. Be careful. We need to let it at least fall back under the level. I don't want to buy it while it's pushing above, because as long as it's pushing above, it's threatening a much deeper run. All right, confirm. Stop loss real tight, 30.86. Yeah, being above the weekly VWAP, it almost changes everything for me. It no longer has me wanting to take that short, especially since it's been trading up here all morning. So this looks like a breakout. Now, it could be a trap, obviously. So if you would rather take the short at the week open, that's still a good trade. It just doesn't mean it's going to work. And the reason being, it's been going down for many weeks in a row. It's like we're literally looking at the very bottom of the market trying to take a short. It's not the best trade setup. Yeah, it looks like it's going to try to eat us up here. Yeah, I mean, that's going to provide plenty of liquidity for upside spikes. This one was definitely my favorite coming into the morning, but I just needed that 4-hour swing test. It's the rules to my strategy. So I can't just buy any random price. I literally need that. So if it goes without me, it's going to go without me. I'm not buying a breakout, and I'm definitely not buying into resistance up here. But you're probably going to see that happen here on Bitcoin as well, right? Everything in the crypto market is structured exactly the same way. It's like Bitcoin was bought up at the London session. London session, pretty much low of day, and it's been going up. That's a support check and hold, upside continuation. Yearly opening range just above. But I'm looking for Bitcoin to bounce up to the 100K area and as deep as 105. That's where I want to look to put on new shorts. But those shorts that I'm putting on, those are hedges. Like, I'm not shorting the market to, because I have a bearish bias. I'm shorting the market to protect my long-term Bitcoin gains. The short that I was in for the last several weeks, I closed it over the weekend. I'm just letting you guys know, the members know that already, but it was a mistake. I was trying to close a different Bitcoin position and I closed my short hedge out, which really sucks because now I need to reposition. I did send off some puts yesterday on iBit on my main accounts. So basically, the way I figured it out, I just did the math. So that way, if Bitcoin drops 50%, then I'll make money on that. I won't lose any of my Bitcoin holdings. And it costed me about $2,500 to put that trade on. So I'm more than okay losing that $2,500 next year because I put that trade all the way out to January 2027. So literally, I just bought insurance. It's not a trade, it's just a hedge. All right. Struggling here at the weekly VWAP. I do expect a little bit of jittery stuff around there. Ethereum ultimately did make a fresh day high here. We want to keep an eye on that session volume profile to see if the POC migrates up to the week open or if it stays put. It doesn't look like it's going to be migrating up to the week open. Now, if it trades right here for like 3 hours, then of course the POC is going to migrate higher. This is the POC. It's the point of control. It's just the price at which most of the volume traded today. Since price is trading up above the point of control and up above the weekly VWAP, it just indicates that there's a whole lot of buying volume taking place. Whether that's short covering, it doesn't matter, right? It doesn't matter if it's a short closing its position, buying back into the market, or if it's fresh longs, really doesn't matter. It's just bid volume. Good one. All right. What's up, everybody? How's everybody? Red candles taste the best, quick and juicy. Yeah, that is true. That is true. You do usually get downside moves are usually bigger and quicker. Yeah. Good morning, good afternoon, good morning, good morning, good mornings. What's up? Seems fine right now. Yeah. Okay. What you're talking about, the stream? Yeah, we've only dropped 67 frames. That's good. A lot better than what it was doing earlier this morning. There is a bounce. It will be a dead cat bounce to retest the 50-week as resistance. Potentially, absolutely, could happen. Good morning, Vixie getting tricksy. I love it. The Warren Buffett thing, people have billions in bonds getting 4% guaranteed. Yes, I know that. Noob question. When you take trades on a daily basis, are you looking to post limit orders whenever possible? Is slippage and taker fees something you should be concerned about long term? Absolutely. Absolutely. So whenever I enter a trade, I enter it on limit. I exit it on market. All right. You don't want to set an exit as a limit order because you will get slipped. You will get slipped. If there's a lot of volatility, price will blast right through your limit order and you will not get filled. So it is so important to make sure your stop loss is a market order. Your entry needs to be a limit order. At least you're never going to get away from completely paying those fees. However, if you go in by limit, out by market, you're like half maker, half taker. Does that make sense? So like for Bitcoin, when I take a normal size position on Bitcoin, it costs me $30 on market. So I go in, I pay $2. When I get out, I pay 30. Instead of paying 30 to get in and 30 to get out, right? So yes, that's a great question. And yes, in on limit, out on market. Always. great question. Something that we also need to talk about a little bit here is because I've been seeing it go around a little bit, that we've got a death cross on Bitcoin on the moving average. We're going to leave it on Ethereum here for a second and just see if it rejects that 4-hour swing high, as it is rejecting the weekly open right now, but it's not a bearish reaction, to say the least. This kind of a good reaction. I wanted to see it go down first. That would have made me feel a little bit more comfortable with looking for longs in a bearish market. I don't really want to see it go up and then down, but if it fails to go under the weekly open, I will probably buy Farcoin today. This is the zone in which I want to be a buyer. Ooh. Right here. So if it can piddle paddle in here for, a couple minutes, I would absolutely look to be a buyer in there with my risk mitigated. We definitely want to see what happens here. All right, so got to send that limit off again. Let it go up. Let it go up. This is what I'm talking about here. Crazy price action. And I do not want to buy it. It's just so close to the high. It's a 4% move, to be fair, if it does make a fresh day high, but damn, it's not a great place to be a buyer. So in a perfect world, if I'm looking for shorts here, even though it's stretched out, I don't want to see Ethereum make a higher 5-minute close. But there's still 3 minutes, 38 seconds left on that candle. It just makes it look like people were waiting for the retest of the VWAP to buy it. It's just a lot of volume coming in the market right now. So you're going to see big ranges, whatever time frame you're looking at. But I have seen a lot of people talking about the bearish cross, the 50 and 200 simple. That is typically a bearish signal, but a lot of people are looking at it as being a potential buying opportunity, and it could be, right? It's just a moving average cross. It doesn't signal anything. Moving averages are just used basically to tell traders how far away price is from the average. It's not a signal in itself. Like a moving average cross doesn't mean that price is definitely going to bounce, right? And it doesn't mean that price is going to keep selling off either. It's just a moving average cross. Every cross is not the same either. So well, here, let's just set an alert on ETH right here. Whatever. Doesn't want to tell these. Okay, fine. Let's go out to the daily. We'll put this cross on just real briefly. Wait, let's do the simple, because the simples is usually what people use. I use the EMAs, exponentials. I don't care about simples, but there's your cross there. And when that cross took place, it took place on Sunday at the close. But just notice how far away the moving average is from price. Right? You're looking at 15% from the average when it did the cross. What people are looking at is they're looking at this death cross, the last death cross that occurred on Bitcoin, and they're saying it was actually a bullish trade. Well, in this scenario, the cross occurred just above price. Just above. Now, this was a nasty bearish candle, but you were testing it just 2 days prior to setting the cross. And then there's another bearish cross over here where you've got almost the exact same thing happening. Price is trading inside the averages. So Bitcoin was very sideways here. This cross it's not as effective as the cross you have now. Whereas the cross you have now shows you that not only is price selling off, but it's selling off aggressively and fast. So if I had to liken this cross to any other cross that has happened in Bitcoin's past, it would be more relative or more like the cross that took place here in 2022, right? This bearish cross, because we have almost the same scenario. Bitcoin rejected the highs and sold off pretty fast and pretty aggressively. Now, obviously, when this cross occurred, you did get one move lower, but then it went into a sideways consolidation zone that took 2 months to play out. Like, we started to sell up in here because it was the year open retest. We could be setting up similar here because there's another similarity with this cross back in 2022 as we have now. This cross occurred, Bitcoin lost the yearly opening range. Here we are here. This cross occurs, Bitcoin loses the yearly opening range. So this cross has worse implications out 2 and 3 months because something similar could play out as to what played out in 2022. Now, with that being said, the Fed was hiking interest rates back then. We had skyrocketing inflation back then. Unemployment numbers were going up back then. Right now, we don't really have those circumstances. So this cross may not mean anything in the future. What Bitcoin needs to do is it needs to find demand. There needs to be a reason for longer term investors to come in here and buy Bitcoin. And to be honest with you, that probably isn't going to happen until Bitcoin gets to a better looking value. Nobody wants to buy Bitcoin at all-time highs. Let's wait till Bitcoin pulls back some 30, 40%. Then we'll go in there and look to put a Bitcoin position on. So that could happen, right? This cross may not mean anything, but if you are going to look at this cross and use this cross to define your bias moving forward, then you should be looking at this cross in the same sort of way as you were looking at the cross back in 2022. That's basically it. We set in a long-term range up here. This is a fresh month range breakout. It's not good. That's why you're seeing downside moves that are pretty brutal and quick. Like every day last week was a downside expansion. Every single day. Monday was the only day last week where you had an up closing day. Every day later until Saturday. Literally was a down, close, down, lower low, down, close, lower low, down, close, lower low, down, close. That is a trending scenario. Right now, you are in a downtrending scenario on Bitcoin. Not great. S&P 500 just rejected the quarterly open. It didn't get all the way up to it, to be fair. Let's see if the SPY did. The SPY did. So you just retested your quarter open on the SPY, and then this is what happened so far. We're seeing a bit of a rejection come in here, and VIX is up on fresh day highs. So this long on Fartcoin is starting to look less and less likely. The short on Ethereum is starting to look more and more probable. Now you are making a fresh day low on the risk markets here on the futures. So we could see a bounce from here, but I'm positioned for the sell side. As long as we're trading under this blue line up here, top right on your screen, this faint blue line, that is your November volume weighted average price. As long as we are closing dailies under that, I have to have a bearish bias, or at least have on some kind of defensive premium insurance. So be careful out there, guys. It could get really nasty. Oil's dropping. Oil actually set up with a pretty nice trade. We also want to pay attention to the 30-year yields because we are in a rate cutting environment. We want to see this bounce get sold into. Here. This bounce. This is what we want this to be a dead cat bounce, because the Fed is cutting interest rates, so we do want this to ultimately roll over at some point. So this is the trend. We want this trend to continue. So we want this to be another opportunity to look for that sell side entry. But only time will tell if that works out or not. If this thing breaks out above this stuff here, and it starts to put in bullish continuation to the upside while the Fed is cutting interest rates, that means the Fed will stop more than likely cutting. And I mean, yeah, the market will basically be telling the Fed, you are wrong. And they may change their policy. May not, may. It doesn't matter. We're watching this like an absolute hawk right now. We are positioned for it to roll over, right? I do have a short on the 10-year yields. So I'm long the 10-year bond. But let's go look at oil real quick, because it is kind of in an area that you could watch for trade setups moving forward on the week. So right here, you're testing your week open. That's your week open. Yesterday, we were trading choppy at the week open. You also have your 21 exponential moving average there. So it's starting to look less and less like a trap. It's starting to look more and more like the bears are selling oil. Big nasty down break day here. Had to be news or something. This dead cat bounce. They're looking to see if it wants to continue lower. If it continues to reject that yearly opening range, or that weekly opening range right there, that would be the area to which I would be willing to put shorts on. So obviously I'm a little bit late in telling you this, but you can keep watching it as the day goes on. You may retest it again or get close to retesting it. And in that scenario, you could ultimately put on a short trade looking for this continuation trade right here. So this was a breakdown candle. You took out that candle's low, but did not take out the high. Closed weak. It's a bullish close, but it's a weak bullish close. So as long as you can't get back above 59.78 on oil, I would be looking for it to ultimately continue in that direction. But as long as you're trading above this line, you've got to be careful, because it could have set in a trap down here. Yes, that's a nasty bearish candle, but this is a nasty bullish candle on the lows. But the trend ultimately would be down. Here's what it looks like on the month. So last 4 months, you've been trending lower. There's no reason to expect that to change this month. So as long as you're trading under this, I would look for it to continue lower this week. If you're above this, then that means you're going in for a November open retest, and that'll put you right up at 59.78. So you got to leave it alone until you get up there. As you can see, we've not tested that yet this week. So if it fails to break down here today, If it gets back above 59.78, I would not be interested in shorts until back up here. So that's oil. That's all week. And for the rest of the month, in my opinion. So you can keep that on watch if you want to trade oil. Going back over to Farcoin, still not doing anything here. Still not retesting levels that we want to see retested. This is weird, man. It's not breaking down. Ethereum not breaking down. Very strange. Risk markets are, though, so it's probably just a matter of time before our short at this level will start to work out. Profit targets. Roughly 2%. So in here, 3,008 would be a profit target for the short side set. Good morning, folks, says LMG. Read that. Good stuff. Quarterly ribbon on the VIX is extremely tight. Yowza. The VIX not really a trending asset. It's a volatility indicator, but yeah. It's been pretty much elevated all year. Thanks to Donald Trump. The GLD trade ultimately did drop back under 375, so we're still holding that. We got a put spread on GLD. Looking for it to go down and test the bottom side of the range that it is currently making. MicroStrategy is another one there where it's gotten so extended. We literally print oversold on the weekly last week. You're under 30, that means you're oversold. This is typically when I start adding to my long-term stock portfolio where I do not trade, I just own stocks. I do typically start adding when this happens, but I obviously know it can bounce for about 4 or 5 weeks and then roll back over and put in another leg to the downside. I know that. I would be adding in that scenario as well. But once we start tagging oversold, I got to start adding shares. And MicroStrategy did that last week on the close. So we're probably getting extended here, looking for fresh shorts. Not a great trade idea. But you still could see a nasty breakdown if the shorts do end up selling right here, right? So you could see a lot bigger of a move lower here. But for me, I typically don't want to be putting on fresh sells down here. This is where I want to start looking to be a buyer when people are literally freaking out. That's when we want to start buying again. I don't know if this is going to work. Here, let's see if I can get it to work. There we go. But yeah, I mean, you're in extreme fear on both stock and crypto markets. Some people don't like this fear and greed indicator, but I looked at the fear and greed indicator on this platform as well, and it's pretty much the same. Here's the fear and greed index. This is Bitcoin Pro Magazine. And we're scoring 11 here today. Today's 18th of November, and that says the 18th of November. So it's an 11. This is an 11. Same. So I'm not sure why people don't like this fear and greed index, but it's the one I look at. The long-term holder supply is still going to the downside. So you're really not seeing much accumulation. The short-term holders are accumulating though. See if I can find that. Let's go look at that real fast. I mean, if you're going to look at one, you should look at the other as well. So short-term holders are literally accumulating here. But long-term holders They've been selling since July. So there could be a lot more downside. It's just, you know, it's one of those things, right? But we don't need the session volume profile anymore. Fartcoin is about to retest the 4-hour swing low, but I want a week open retest. However, if it fails to put in lower lows here, then lower lows, but fails to continue going down, I might throw on a long trade. The reason I say might is because now things are changing a little bit as we're seeing risk markets get obliterated here. So finally, the S&P 500 starting to look a little bit like Bitcoin. VIX still pumping. 25 on the VIX usually means the sky is falling. Usually. It's insane to me that we're just down a little over 4%. We could see a nasty downside move here, but I hope it happens as I got on a short position. We're testing the bottom edge of the weekly expected move. Bottom edge of the weekly expected move. But as long as the VIX continues to climb, I would not expect a reversal here. Not expect a reversal. All right, so back over here, let's get rid of this. We don't need this either. So I'm not wanting to buy a VWAP test. I want to buy the objective level. Objectivity is the best way. Well, I mean, the weekly VWAP wouldn't be a subjective level if you peg it to the week open. Pretty nice bounce there, to be fair. S&P bouncing hard. The weekly expected range low. That's where a lot of your premium sellers are going to be stuck. So premium sellers, weekly premium sellers, they like to sell premium just outside of the market maker expected move. It's sometimes called that. It's the weekly expected move is really what it's called, but sometimes the premium sellers will come out just outside of that expected move and sell premiums. So once you break down below this, those people are in big trouble. And that causes more volume and liquidity because those people have to make moves happen. They have to take profits or get out of those positions. ETH bouncing here pretty strongly. So the fact that we're not breaking down on the Fartcoin while the S&P 500 is down 70 points is insane to me. This thing should be off 8% or 9% right now. It's not. I'm going to be so mad, man, if it doesn't give me that level. Going to be emotional. And Ethereum almost hit our profit-taking level and bounced significantly. Volatility is elevated, so your 5-minute swings are going to be vicious. Make sure you guys are trading with a smaller position size than normal. These things can get out of hand really, really quickly. Makes perfect sense. Thanks. You are more than welcome. Bitcoin dominance falling hard, maybe entertaining an alt season. Hey, maybe. You know what I mean? Pretty much that's all you need to be able to classify alt season, right? Is a weak dominance. But if you look at the others charts and the total charts, you're not seeing that. You're not seeing a crypto, but it could ultimately, right? So you still got a weekly support level here. You're still trading inside of last month's range. You're not really doing anything massive. This is the quarter open. Or was that? That's the quarter open. Yeah, this is Q4 right here. So you're not really doing anything important or dangerous until you break under 652. Now, once that occurs, you've got serious problem. Because if you look, since April, the SPY every month put in a higher low, higher low, higher low, higher low, higher low. This, if that happens, will be the first month since April that you were putting in a lower monthly low. Important. Doesn't mean it's going to break down and continue lower. It just is. We never really want to buy an extended market like that. But we'll see what happens. I'm not expecting this. I'm expecting more this for the rest of the year going into early next year. And maybe we liquidate this range. But what happens from here will be extremely important to me moving on. Because it will literally dictate my directional bias moving on. But it's got to do it first. As of right now, you're just an inside monthly candle. At any point, you could set the low of the month. But in between levels like this, I don't want to really do anything here, right? I can't do anything unless support holds like it did here, like it did here. Gapping down, breaking down, retesting it, and going lower doesn't look great. This looks like the target. So we'll have to leave it alone and see what's what. But if the crypto markets could have just got over their skis, right? They could have just got a little overdone too quickly. But I did want to pull up the total charts. So here's total 2. Clearly not in an alt season here. Still elevated on the monthly chart, but you've smoked at least this month did. So you're still an inside month here, but trading down next to last month lows. That's not great. Could be a buying opportunity. Maybe. If dominance does roll over and give you downside continuation, one could make the argument that this is potentially a buying opportunity. So keep an eye on dominance. If it stays weak here, same scenario, right? If you're taking out last month's low on dominance, then you might want to think about putting on a little bit of long risk on some kind of crypto, right? This is just the total market crypto cap. And this is excluding Bitcoin and Ethereum. Still nasty last month. And then here's your others. This is the top 10 market cap excluded. So Bitcoin, Ethereum, Tether, the top 10 market cap cryptos are excluded. Not really an alt season here. But it could end up turning into one. Yeah, if dominance continues to roll over. Maybe. Just keep it on watch. Keep paying attention to it. It's a very good thing to watch. Let's get the VIX back up real quick. Where did it go? There it is. Yeah, this thing's going to be finding a bit of resistance here. This is your highest daily close since October 16th. It could act as resistance. Bartcoin, ETH. If this candle closes higher, I don't love the short. Even though risk markets are getting killed, crypto markets could be over their skis. You got a shorts covering. I covered over the weekend on my short. It was an accident, but still, it was getting a little bit extended to the downside. That in itself could cause an upside break. All right. Getting stopped again. And the long that I wanted, I just couldn't get it. Yeah. Pingu nasty. Bonk nasty. Dash down XMR. So XMR not seeing that heat that ZEC and Dash is feeling. So maybe there's a selling opportunity here on XMR, but it's a dangerous asset to trade. This would be oh, I don't like that 30-minute reaction. I do like that volume profile for a sell. There's my short setup right there. If we could retest 407.49 and reject, I would absolutely be fine with taking short risk on that. But, I mean, is this thing going to get bullish if Bitcoin and Ethereum both bounce hard today? I don't know. It's possible. This has been extremely bullish for a while now. Because XMR, ZEC, and Dash, and Litecoin are all in the same sector. Did I put Litecoin up there? TAO is not in that sector. But you can see Litecoin not getting killed like Bitcoin, like Ethereum. Still trading inside last month's range. Last month was an outside month, but it didn't really close nasty. Still trading inside July's range. You can see how it's just been like, it's not been heavy. Like everything else has been heavy and been rolling over. Litecoin's been choppy and difficult to trade. So I think my favorite would be this one. XMR. I'm going to set a alert there, maybe. What is going on? Give me my alert. What was that on? What chart? What chart? This chart? Yes. Thank you. There's the alert. So we'll pull this one up. So yeah, definitely stopped on ETH. The higher close didn't occur though. Yeah, maybe it just wants to make a fresh day high and then it wants to roll over. For Fartcoin, that's much higher. That is if the S&P continues to roll over. A lot of volatility. So Ethereum is making a fresh day high right now. So close. S&P 65.97, 65.93 on the cash market. There's your fresh day high on Ethereum. Now, does it roll over here or does it continue to extend up into 31.20? An extension would not be shortable because you currently have a short squeeze occurring. A rejection would definitely, though, be something to look at. See, Fartcoin still got that bullish structure, unfortunately. Yeah, there you go. That's an extension. Crazy stuff, man. S&P bouncing pretty vicious. Could be buying up on S&P. We look to buy the S&P on 3, 5, and 10% dips in a bull market environment. We're still in a bull market environment. It's just Bitcoin and the crypto market is saying, nuh-uh. That's literally it. Everything is bullish except crypto. We were looking at stocks yesterday, and you have Google and all them things still trading up at all-time highs. Apple, all-time highs. Microsoft isn't. So XMR just gave us our alert. We want to see this reject here. This thing is so dangerous. I have not had good luck on it at all. At all. I don't even know what would be a good position size to take on this. And for whatever reason, it's hard to get fills on this thing. Funding rate is structured for bearishness, and there's a million in 24-hour volumes. And I do like the session volume profile. We can check cumulative delta, though. I want to see a rejection here. Let's check cumulative volume deltas. Like it, man. Love it. Yeah, I'm taking that. It's going to be a difficult one to trade because everything says it's a short. Everything. But if Bitcoin stays bullish, this could too. We're not seeing a short side reaction. Stop loss set. I don't want to be holding it as long as it's trading above 407.49. But my stop loss is set like 408.17. Not very high. So when I'm looking at the deltas, I'm just basically trying to see who's leading the day on deltas, and I always check multiple time frames, simply because, so like, if you're under 0, that means the delta is higher to the bearish side, to the sell side. When the delta's above 0, that means the bid has the delta. And that's on the 30-second chart. Then I want to go into the 5-minute chart, because everybody has access to the 5-minute charts. Not everybody has access to 30-second charts. I want these to line up, and it does. So even here, you're seeing a heavy sell side delta. Now that means nothing if the asset is being manipulated. All right? It means literally nothing if whoever controls the majority of this asset's supply is buying. If they are bidding up the price or propping it up, doesn't matter what the indicators say, it's going to go higher. That's why we got to set stops. There's nothing that'll give us a guaranteed short setup that'll work 100% of the time. But I would take this setup every single time it presents itself. Whether I eat a stop or not. The one concerning thing that I have right now is there's only 34 minutes left on this 4-hour close, and that's a pretty bullish reaction. I don't love that. But the previous 4-hour wick is way too high above the weekly open for me to even want to short it at that point. Because if you're up in here testing this, then that means you've already smoked these shorts. Because only big money or smart money is going to have a stop loss, a short setup here, and a stop loss way up there. Someone that isn't trading with leverage or something like that, right? If you could set your short position to where you're only going to lose 1% of your account if it trades back up to here or here, well, then you could. But let's be honest, retail traders don't do that. They're trading with 100x leverage and every dime they got. They're betting the farm on it. So just by getting back to here, you will have liquidated all intraday shorts, or most of them, except for the people that shorted it up there, obviously. I don't know why they would have shorted it up there, because up there you're bullish on the week. There's like literally no setup there. It would have just been taking a short because you wanted to take a short. There's no technical setup. You're trading as an inside day. This is a good looking setup. I would take this every time. Don't love that hourly candle though. So I don't know why the last 30 minutes have been so bullish. The only thing I can say is because Bitcoin and Ethereum bounced then as well. So you're seeing Bitcoin bounce the last two 15-minute candles. Ethereum, the last two 15-minute candles. Fartcoin, the last two 15-minute candles. XMR, the last two 15-minute candles. But really and truly, it's going to be a volatile day. I like that. Yeah, I'll take that. Yeah, bitch. Keep going with it, though. Don't just give me one of those. Since I can't get the entry on Fartcoin and ETH's already pretty much smoked me, I'm done with it. I'm done with Fartcoin as well. There's no trade there. The only crypto setup I see is here. It doesn't mean it's going to work out. It's just it. That's all we got. At least for the morning. Things may change later on today. The VIX is elevated, and this asset has not been bearish. This asset has been bullish while all other cryptos have been absolutely getting annihilated. July is when we started shorting Fartcoin. We started shorting Fartcoin at $1.40. It's trading for 25 cents. We pretty much extracted all the alpha out of Fartcoin to the downside. I mean, literally, we were shorting it up here. So it's pretty much giving it all back. Same goes for Pingu. We annihilated Pingu much higher. But look at it go today. Weekly open on Pingu way up there. Would I want to short Pingu after a breakout above the VWAP like this? Because this is the weekly VWAP. If it fails at the weekly open, probably. But that's only like if the weekly was setting just under the 50 on the RSI or retesting it. So like if the RSI looked like this, then yeah, I would absolutely take that short. Since it looks like this, not really. Like Bitcoin is pretty much oversold on the weekly, so we gotta chill on the shorts and let it bounce, let it go into a range. Then we can find the top end of the range and look to reinitiate short positions. Right now, you're in price discovery on a lot of these things. And bullish bounces and bear markets can be extremely aggressive. Yeah, like that. So this will set the pace. The pace was set yesterday. This might change that pace. So now you'll probably have people looking to be a buyer on pullbacks throughout the week, depending on what it does today. S&P is still bouncing off of that low weekly expected move. If things stay this way, you're probably going to close well under that today. But tomorrow you have earnings on Nvidia. What's Nvidia doing today? Nvidia's down significantly here. It almost looks identical to Risk. Very similar. Big bounce here, big bounce there. And then it rolled over, and this rolled over as well. So earnings tomorrow. Post-market. It's going to have big implications for risk markets. Oh, there it is. Same scenario. We're roughly looking for like 2% moves. So profit target 398 on XMR. I don't know if the chat just isn't moving or what, but on my end, the last question is still Jewelry Affairs' question on dominance falling hard. If there are more questions under that, YouTube has just not shown me yet. Okay. I was just told by my producer that they're not seeing anything either. I'm kidding. I don't have a producer. All good? Yeah, all's good. We're just wanting to see XMR roll over here, give us back the 2 small losses we took on Ethereum. That would be freaking pimp. I like what S&P's doing. I'm more than comfortable holding the short on this at 407.49. We almost got out on Ethereum. So it reversed in our face. Right? If we would have been able to put that short in up here instead of at the objective level that we were watching, we would have more or likely, well, no, we wouldn't have. It still would have been just shy of our 2% profit target. But that's still well within the parameters of a decent strategy. You're not going to nail the exact perfect top every time, but you will get nice trades. Missed your comments on Litecoin. Good, not good? Well, a lot of strength came into Litecoin due to the fact that XMR, ZEC, and Dash, it's a sector for privacy tokens. For whatever reason, that sector, my opinion is that it's because Zcash was supposed to have a halving this month. So people were running into privacy tokens based on the pumpamentals or based on the fact that the halving's coming by. So kind of like buy the rumor and then sell the news. So Litecoin did experience a little bit of strength based on that. But not quite the same amount of strength as ZEC and as XMR. So XMR was just pumping the other day. So if we put this on the daily time frame here, let's fix this. This isn't right. It's so close to the yearly open, there's really no point. Oh, wait. No, it's not. Where is it? There it is. Yeah. Litecoin would actually be a short for us right here. Yeah, so just give me a second. I know this chart is extremely dirty and busy. Just give me a second. I'm trying to clean it up for you. Is that even November? No. So late. I haven't really analyzed this thing in a while, but and then obviously this needs to come with us as well. But anyways, so I think this was the day that XMR had the pump. You can see, it's not doing what the other markets are doing. So if you compare Bitcoin, Litecoin has literally been sideways since October 10th's dump. So you did experience a nasty liquidation on Litecoin as well. But since then, since that day ended, you've gone nowhere. Whereas Bitcoin, it continued lower. So Litecoin has experienced a little bit of lift if you will. Like, it's been not as heavy as Bitcoin and Ethereum on suffering losses because of like ZEC and XMR and Dash. So if you compare this chart to ZEC, right, it's been bullish since that big nasty dump. It's only been going up. So Litecoin hasn't gotten the same amount of strength, but it has been a sympathy play. So everybody that missed the ZEC and XMR rally, they were going into Litecoin because Litecoin is also somewhat of a privacy token. So they were only playing Litecoin based on those two assets. But if those assets roll over, if ZEC and Dash start to roll over, right, then Litecoin will as well. So Dash is a down day today. Dash is down some almost, at one point today, it was down almost 10%. So it is literally experiencing weakness, just not like XMR, which is still up, still seeing strength. You're still at the top of the ranges. Like, look at this weekly, dude. Last week was a pullback. It was an inside pullback. So the week prior was a nasty move higher. Fresh all-time highs? No, but almost. So it's been strong. If these start to roll over and start to experiencing the weakness that the rest of the crypto market has experienced, I would expect Litecoin to roll over. Yeah. Welcome to Retail Level 1. Thank you so much. Real Ice Bear. Yeah, so Litecoin for me, like if I was looking for a trade on Litecoin today, I would be willing to short it if it rejects 97.85. So that's yesterday's high. So if Litecoin was to get up here and fail, then I would be okay with holding shorts on Litecoin. And then obviously I would have a stop loss, but just because it fits the parameters for the strategy. And the strategy, it's the trend following strategy. So you're not in a trend here. So obviously the trade might not work because you are range bound. You are still in a range. You're still in price discovery. So trending strategies don't work out as often as they would if the asset class was trending. But I would still be okay with taking this because it is a setup, right? You are closing dailies under the 21 exponential. You are closing weeklies under the 21 exponential. So you can start taking shorts. You can start looking for positions to the downside on Litecoin. And for me, the exact setup would be yesterday's high. And the reason for that is because it would be a fresh weekly high. Right? You would be making a fresh weekly high. So that's the opposite of what we want to see for bearish positions. We don't want to short something that is strong. But if you listen to what I said, if you wick above that and reject and fall back under it, and then refuse to trend above that level, then I would open up shorts. So literally, I would want to see something like a 5-minute candle open up, put in a move above that, and then reject. And then the only thing that would be left would be like a wick. If I saw that, and then it like traded up and then just like failed to go up, and it just starts doing something like this, then I would be okay with holding this short. then I would want to see a rejection under this, right? Break back under the week open. Then I would be perfectly okay with holding that short trade for the rest of the week. But if you continue pushing higher above 97.85, you don't want to be holding that short because it's strong. The volume weighted average price is down here and price is pushing up. So it literally means it's doing the opposite of what we want to position for. It's going up. We don't want to position in assets on short trades when they are pushing up and giving us upside continuation. Those type of trades you want to be long, but I wouldn't buy that up here. The strategy says it's okay to short Litecoin if it's staying under 97.85. A strategy that I built over time, right? It is a trending strategy. So if you are looking to short Litecoin today, understand that it is not trending. It could start trending down. It could, but as of right now, it is not. I don't have the exact numbers for you, but I do know that in a trending scenario, in a trending market condition, the strategy has a much bigger hit rate than it does when the asset is range bound. When it's range bound, it's probably the hit rate is probably closer to 50%. It's just random. It's a coin flip. But when it's trending, it's a pretty damn good way to hit those short, those bounces. So yeah, that's my opinion, and that's how I would watch Litecoin moving on. I'm not going to take the short on Litecoin because it's range bound. And by me shorting XMR, it's the opposite of what I should be doing because XMR is currently trending to the upside. You see this? This is a trend to the upside. So trying to short this is the exact opposite. So right now I'm being more risky. Like I shouldn't be looking for shorts here. I should be waiting for pullbacks into support and buying. The reason I'm even taking the short, the only reason I'm trying to short it today is because VIX is so elevated. But sometimes that has zero effect on the crypto market. Zero effect. The S&P could be down 20 points or 120 points, and some crypto assets are just going to be up. Like right now, for instance, let's go see who's moving today. Yeah, right now you have an asset that's up 67% on the day. So even though the S&P is getting beat up today, you still have many assets that are up above 20% on the day. So shorting the XMR short is not an A+ setup. It would be an F- setup. Litecoin would be from A to F, a C. You feel me? It would, yeah. If you put it on a scale like that, this would be an F+ setup. F+, because it's doing the opposite of what we want to see. Market conditions matter, and market conditions matter. It's asset specific in some cases. But just because the rest of the crypto market's bearish doesn't mean this is going to be. This could go up for the next 10 years. If it's got good fundamentals or good pumpamentals, and if it's being manipulated, it could go up for indefinitely, no matter what the rest of the marketplace is doing. I feel better about it more and more as the minutes go on. I'm feeling better about it. And obviously my position is too small on this as well, because we're getting really close to profit target, and I'm not going to, my position size is not big enough for me to exit on taking profits. I can, and it would pay me for the 2 losses I took on Ethereum, because I only lost $60, and my profit target is usually 300. I could theoretically add to the position if it gives me another rejection. Let me see here. It's going to lower my cost basis by metric shit ton. I don't like that as a supply candle. I do not. This is what I like to see for supply. A small body and big rejection. I do not like to see big bodies and strong closes with a minimalist rejection. So this would not be my definition of a supply candle. But I'm just looking at mitigating my risk off of an objective level instead of the average. So theoretically, if I were to put in another $400 or $500 on this short, it would bring my cost basis down from where it is, which is here, to about here. It also means I would lose double on the stop that I've already got situated. So I would have to redo this whole position. So by entering a new short, it's going to drop my cost basis. Therefore, my stop loss has to drop with it in order to just lose the same $30. It's just mitigating risk. That's all I'm trying to do here. Like I said, this is an F as far as setups go. It's counter trend. Counter trend trades very rarely ever work. The trend is your friend. There's a reason that is a very overused statement. And we're about to close this 4-hour session too. There's 8 minutes left. So this thing needs to give me a lower close. A higher close, I'm not going to love that. Not going to love that at all. So this is it right here. Okay, so there's our current week low. There's our current week high. So we're still in price discovery. So it's anybody's guess. It's a 50-50 shot. If we make a fresh weekly high or if we make a fresh weekly low. Anybody's guess. 50-50. I have no idea why it rejected. I mean, the only thing I could say is a 4-hour resistance. That's why it rejected there. But, I mean, that would not have been a good short setup for me. But obviously it was for it. The more time it spends trading here, it feels to me like it's trying to go higher. when we're usually right on our setups, we know pretty quickly. Pretty quickly. So if you're not right on your setup, after a while, you're probably not right. You're probably wrong on direction. But it's the one thing no matter what we do, we will never be able to know for sure. ZEC's down, but also bouncing. So that's, I mean, the Bitcoin bounce, the ZEC bounce, that's what's hurting the XMR short. And the fact that it's trending higher. Short at Bitcoin year open, maybe. Oh, no, not for me. I need to see an aggressive bounce to liquidate some of these lower shorts before I can get involved with a short. I mean, if it rejects, then obviously you could, right? I honestly thought it was going to bounce from there yesterday. And because it didn't, it pushed lower. Now I'm a little bit, I would be way concerned with trying to short here. So you might have just got here, but short trades on Bitcoin right now are extended. I know it looks like it would be a good short setup, and you've heard me say many times, on a retest from underneath of the yearly open would be a good short setup. That's like only if the market isn't already extended to the downside. Like we've been going down for 4 straight weeks. At some point you're going to experience a bounce. And how aggressive that bounce is unknown. I would rather give that bounce like 2 or 3 days or even a week to play out and then look for short entries, new short entries. You have missed you've missed the majority of the short already. So looking at just this price action right here, why would you want to take a short right there? I mean, it can reject and it could go lower, but you're shorting an oversold market. You're shorting an oversold market. The best short would be up here. Right? Like it played out here, there. Those are the better short setups. Right now, you got people looking at this saying, yeah, okay, how long has it been since Bitcoin's been overbought? Oh, all the way back here? Yeah, or oversold. Yeah, I'll go ahead and buy it. Not the best place. I think 101, like a 100K is a big figure number. It's a massive number. So that, I want to see a retest of that first. If it gets as high as 105, then I would take it there. But once you start getting up into this area, then you have changed the trend almost. Right? You start closing weeklies back above the 21 exponential, then something's got to give. Something else is going on. We want to see rejections off the daily 21 for trend continuation. And right now, that 21 is way up here. So if this downtrend is going to resume and be strong moving forward, we want to see rejections here. If it doesn't reject there, then it's probably going into a price discovery formation. So XMR pushed up, smoked me. That's what I get for taking an F plus setup. If this was trending down and had been trending down for more than a month, that would be an A plus setup. So I can show you what an A plus setup was like on Bitcoin. Oh, let me get rid of all of this stuff so make it easier. So right here was Friday. That was this week, right? This week. There's Monday, so that's your weekly opening price right there for this week. This week, it was a complete downtrending week. You did not put in an inside day range until Friday. So when I put out that video on Saturday, I said, watch Friday's high. And if you liquidate Friday's high, that is the short. That is an A plus setting or setup, because you are broken down. You did put in downside continuation. You did go into price discovery to retest the top side of that range, which was the month open. It was October's open. You liquidated this swing high right there and rolled over. So this right here was our clue going into next week to look for downside continuation. So this was an A plus setup. That's why I put the video out. That's why I said if you liquidate Friday's high, which was 111.028, which you did, then short it. Boom. A plus setup. This is the opposite of that. This is trending up. This is an F minus setup. This is going the other direction. This, yeah. Much different scenario. The trend is your friend. It's cliched to say it, I know. But once you truly understand the concept of trend, then you will see it. You'll be like, oh, yeah, it does. So like right now, trying to buy Bitcoin is against the trend. But you're so extended from the mean, it's also not advised to look for fresh shorts. It's like kind of in a set on your hands scenario. Like look for other trades, other assets to short. Dash isn't there yet, but it's getting close. And then Litecoin, that's actually a C plus setup, right? Or just not a C plus, just C, because it hasn't broken down yet. It hasn't solidified a trending condition. But it could here. It could solidify that trending condition. So this would be a C plus or C, just C setup. You're sideways, but trying to break down. So as long as you're trading under the weekly high for this week, you can short Litecoin. If it's trading above the weekly high, you cannot, because now on the weekly order flow, you are bullish. You are making fresh week highs. So then you would have to wait until the breakdown comes, or at least until the sellers reveal their hands. And when looking at the intraday chart on this, right, even though it's above the VWAP and above the weekly open, it's still below the weekly high. So this looks better than the XMR trade. But I had already taken the XMR trade, so it was already too late. But if I would have saw this first, I would have taken this one instead. I don't love that it's above the VWAP. but it's a much better trade than something that is currently bullishly trending. And it put in that's a nasty 4-hour close. I don't like that. So it could be heading for the weekly high. So maybe they shorted here because that's the 618 or 786 of the weekly range, right? Because that weekly high was put in yesterday at 7 a.m. in the morning. And you already had this weekly low when that high was put in. So if you fib that range, the 236, if you fib it from the downside, then it would be the 786. So that's why they shorted it there. I like objective prices more than I do fibs because fibs can be subjective. They're not subjective if you put them, if you're only fibbing a specific weekly or monthly range from low to high, then it isn't subjective. But not many people fib price like that. Most people fib price from subjective levels, from random swings. Like from this swing low to that swing high. Why? It's like, you know what I mean? November's low, that would be like going from 1 month's low to another month's high. Why would you do that? That's so random and subjective. Fib objectively. And then you can see how that fib would have lined up a decent little short spot. Not one I would have wanted to take, but still good. This short trade might end up working. I was just early. I will not be trying it again, though. I'm done for the day. I hit my 3 stops risk limit. So my trading day is done. And it sucks because the only position I have open right now is on the ES GLD. I have nothing open on crypto. Nothing. So I'll have to wait till tomorrow, and then hopefully this will play out a little bit better. Or maybe since Litecoin is a better setup, alphabetically speaking, maybe this will give us a setup tomorrow. As right now, it's trying to put in trappy behavior. It's trying to so if you close today above the 21, it's potentially going to be a bull trap, depending on what takes place tomorrow. But you're still trading inside yesterday. You haven't done anything. Today's price action has done 0 to the weekly range. You've not made a fresh weekly high. You've not made a fresh weekly low. Or did it make a fresh weekly low? It did make a fresh weekly low. Okay, so I take that back. Today did make a fresh weekly low. So we have to be careful. But we can definitely keep this on watch. Because it is a C setup. Pumpamentals, love it. That's about all one can say for crypto markets. I mean, it's like Bitcoin does have fundamentals. I would even say Ethereum has fundamentals, but when you get on when you start getting out there on those less known alts, it becomes pumpamentals. I'm not interested in a Bitcoin short until it liquidates the high above 96K. Check the 1 hour chart. Look at those juicy highs. 96. That's not Bitcoin. Yeah, I mean, it's still just an intra-week swing. It's this week's high. So, I mean, yeah, technically speaking, if you liquidate that and roll over, one could argue that a short trade might work, but you will be trading pretty far above the week open at that point. Yeah, it'll start looking less like a liquidation and more like the weekly low is set. This week could be an inside week. Well, no, it can't because it made a downside break. I'm so confused. No, it would not be an inside week. It would be a downtrending candle, but it could still close up inside last week's range. So, if it rejects the week open or puts in a wick above 96 and then dumps back under the week open, I would be comfortable with holding a short. But that's what would have to play out. And that would be a pretty nasty move above the week open. So even opening here and pushing up to liquidate these highs, for me, would be a little bit sketchy. Because your weekly VWAP at that point would start... Well, I don't have that color green. Would start to do this. Oh, any pullback into this would be worrisome. We'll see what happens. That's all we can do. We can see what price does today and then make decisions based on that. I figure there will be some people looking to short that weekly open or yearly opening range. Because that is a breakdown. You close the daily under it. The only way I don't like, the only way I would say probably leave it alone is if you turn that day into a trap. And that's yesterday's high, the weekly high. Getting above that, you're going to look like you got a bear trap here. So whenever you make a bear trap like that, remember, we will often watch daily support to see if that level holds. And if it does, we look for longs playing off of the trap. So that might be something to look at too. If we liquidate 96K, Wes, see if they, once that liquidation occurs, see if you can get a retest of daily support and see if that holds. If it does, then maybe it is a long. There's your week high. Nope. Liquidation, pullback. If that holds, that would be a buying opportunity, potentially. We're just going to have to let the day play out. Unfortunately. The even Litecoin has a nice hourly close above hourly res here, and it's an outside bullish reversal on the hourly time frame. I don't really give a crap about outside reversal candles on intraday charts, but it is what it is. It's a bullish engulfing. It's an outside reversal. And it closed above the midpoint. So it looks like a legit breakout here. Sellers may show up later. Some bad news could come out. Something could come out to force sellers' hands to come in. We'll see what happens. We'll see what happens. See, I was looking at this as the yearly open. That's Litecoin, sorry. Bitcoin is at the yearly open. So extended. S&P's still bouncing, so we've spent about an hour and a half or an hour and 15 minutes of just straight chopping at the lows. Where did it go? Oh, it's up top. So literally, there's your open. Downside push and pullback. Downside break and continuation. Still trying to hold 66.20 as resistance. Or 66.18. And this isn't extended. This just is like a clear or a fresh breakdown. So there was your breakdown. This day right here changed everything. That's why I took the short Friday at, what was it, noon? Almost 1 o'clock when that happened. And I jumped on that short. I've closed that position, but I also opened a long-term hedging put. I bought the 6100 strike put 150 days out. So April 2026, April 17, 2026, that's the expiration I picked. And I picked the 6100 strike. It's just for protection. Just in case this thing tears ass to the downside. Which could have very bad implications for Bitcoin. But we'll see what it does. Coming into some kind of support here, but it's just a day support, week support as well, I guess. And we need to keep an eye open here. Yeah, if you fail to break out above 66.18 and put in higher highs and higher closes, you're threatening a run down to 65.50. That's literally a 50-point drop. So right now you're down on the S&P 1%. That's 71 points. This could end up being a very nasty down day for the S&P if it continues lower. And it does look like the bulls are struggling to pick it up. They're not struggling to pick up Bitcoin and ETH. You're testing the year open range right now on Bitcoin, almost. Almost there. Dollar is also making fresh day highs. There wasn't anything scheduled for today. Here, let me close that up. What did I do? I got rid of my Forex tab. Here, let's pull it up on iBit. The euro dollar is breaking down. That means the dollar is the inverse of this. Dollar rejected Friday's low. I mean, here, I'll just pull up the DXY. My DXY chart is lagged, I think. Looks pretty similar. Yeah, Friday's high. You bounced off of Friday's high, which was yesterday's midpoint. This is why USD JPY is not rolling over. You have yen weakness and dollar strength. Let's see how weak the yen is, though. I haven't looked at it today. Yeah, it's weak today. You're making fresh day lows, so you took out yesterday's low already. So the yen just basically opened up yesterday and took off to the downside, and you're seeing downside continuation today. This is a fresh weekly high on the dollar. And that's after it made a fresh weekly high already this morning. So this is your third week high of the week. When this kind of stuff happens on price action, it makes it very difficult to trade. But, I mean, if you're looking at it from a daily chart perspective, you probably would have been looking for that long. I don't know. That's just a liquidation of that swing low. Of Friday's high. There's Sunday's open right here. So there's your week open. Yeah, that would have been a difficult trade to take this morning. Well, now basically the longs from Monday, they took back over today, so your dollar's trending back to the upside here. You're above daily res. You tested the 21 exponential and failed to break down here, and you're reversing. So it looks like they want to keep it running higher. So the euro dollar short trade is still open and still performing. USD Swissy is probably on the not looking so good today. It isn't. Are they selling Swiss franc? Or Swiss yen? There it is. Yes. Oh, even though the yen is weak today, Swiss is weaker. Swissy is the weakest on the day. This is kind of... As long as the yen stays weak, this will not be concerning for me at all. But if these two assets stay weak moving forward, I'm not going to assume a bear market is here. This asset needs to firm up, and it needs to start firming up pretty damn soon. Otherwise, this down move on the S&P is going to be hit or looked at like a buying opportunity. Especially if your yields continue to roll over, which they're not doing today. So we find ourselves in a sticky position here, because if the dollar continues to be strong, that's going to put weakness on the yen. So we literally need to just keep our eyes peeled on the yen. If at any point it starts to firm up, even with dollar strength, then I will be concerned for all the markets. You're seeing yields push up because of dollar strength. Like, yields are failing to roll over. They might ultimately end up rolling over, and I still like them to roll over. For me, as long as yields are trading under 4.75 or 4.79, I should say. Nope, I got the right level. But that's just a weekly swing. This swing high is just a weekly swing. It's not a monthly swing. Google, Berkshire took a $4 billion position. Warren doesn't buy tops typically. Okay, do we know why? Let's go look at Google. Is Google getting ready? Okay, is Google getting ready to announce a massive breakthrough in quantum computing? Why would Berkshire Hathaway buy this? Yeah, I'm reading it. This is weird. Here, Warren is retired, right? So is it Warren that took the position, or is it the new guy? It doesn't really matter. Taking a new $4 billion position on Google at the highs literally makes 0 sense unless they know something. You would have, dude, yeah, I'm going to buy Google at 285 with $4 billion because I think it's going much higher. Like, literally, that's his. Do we know that he's not, that wasn't a hedge of some sort? I don't think they trade like that. I don't think Berkshire Hathaway is. Like, it would make sense to buy $4 billion worth of shares if you just shorted $6 billion worth of put options. You know what I mean? But I mean, that's like the exact inverse trade, so why not? Why? It doesn't make sense. Yeah, I would like to read that and see what's going on with it at least. I'm still not loving Google, but it's at the highs. But here's the thing, right? They're working on quantum computing. They're working on AI. Google's at the forefront of data collection and data selling. I mean, they make money. They make money. Could you elaborate on your general strategy? I see you have some set rules like no more than 3 entries. Your stop losses are always around $30. Are those numbers based on fixed percentages? No, it's based on what I hold in my trading account. So, like, I have $15,000 in my trading account, but it's not all in the trading. It's mostly all in spot, right? Spot, tether. So I don't want to lose more than $100 per day because I'm trying to make $300 per day. So I usually will set that up because I'm trying to scalp daily ranges every single day. I don't want to take more than 3 losses per day at $30 pops. Because if I use the whole trading capital on one trade, then the first entry I took here on ETH would have had my day done, right? So it doesn't make sense to go in full position and full leverage. Because if I'm wrong, I'm going to get stopped out and then I'm done for the day on one single trade. And there's just too much intraday volatility and intraday chaos to be able to get a good hit rate on trading every single day. Does that make sense? So I split it up into 3 entries. But I'm using leverage, 20x leverage on each position. So that way, if I am right and I do nail like the swing high or the swing low of the day, and then price does go in my direction, I can get out quickly for a $300 win, even on that $30 stop. So it's almost a 10-to-1 risk to reward. But it's broken up in 3 different entries just in case the first entry is too tight. Because usually, like if I'm right with the strategies that I employ or put to work, I'm usually right pretty quick. It will roll over like this and then just go. If I'm wrong, then you get this kind of stuff. Notice how it's accumulated above the weekly open and now going higher. So this is why I break that up like that. If I go at it twice and I'm still stopped or I'm still wrong, then I know I'm forcing the trade. At that point, I've done eating 2 stops trying to short it. I'm done with it because more than likely I am wrong. So I just leave it and I'll wait for tomorrow because I'll have more data to go on tomorrow. I trade every single day, so I know what the weekly range looks like on every asset that I watch every day. So like right now, I know for a fact we are making fresh weekly highs on Ethereum. We are well above the weekly VWAP. We're well above the weekly open. If it stays above there, then this week might not be a bearish week. So I have to be looking for long opportunities later on, or maybe even tomorrow, depending on what happens. So it's just a way for me to mitigate risk. When my internet was terrible, like back before the new year, back in 2024, I did these live streams twice every week, but my internet was so bad, it was hard to keep the stream going. But once my internet got changed and fixed to where I had really good internet now, I trade every single day live, every morning, every day, unless I have to go do something or whatever. But most of the time I'm live 6 days a week. But before I was trading live 6 days a week, I wouldn't be trading every single day. I would only be looking for the best A+ setups and only putting capital to work on those setups. Sometimes it would be, 1 to maybe 3 trades per week. Period. In those scenarios, I was, I had a bigger position and all that. But the risk would have been wider and the leverage lower. Now that I'm trading every day, I had to basically say, what can I lose every day and still make money by my trading platform? Because, I have to still be able to pay my bills week to week, which obviously I can. But anyways, and it came down to be about $100 a day. So with the math, it's going to give me more opportunities also. So there's that. Most weeks we are closing the week out in the positive on a $15,000 account, roughly in between 1 to 3, 4K. We very seldom ever close the week down. But right now I didn't trade over the weekend. So right now my weekly portfolio for this week is down. Well, no, I take that back. The Fartcoin trade paid out $200 yesterday. That trade got stopped out. this morning, but I did take profits on it. So it's right around break even, and it's Tuesday, and usually we're already way to the good because I trade on the weekends too. Yeah, it's just to manage risk, to make sure that I'm not throwing too much capital away on a daily basis, because I know a setup will present itself. It's a matter of time. There's definitely no point in risking a lot of money on one trade. On the best setups, like my A+ setups, you're still going to lose trades. Even if it's an A+ setup, it is still going to lose. You're still going to only have like a 61 or a 65% win rate, even by only taking A+ setups, because the markets are so chaotic. There's no way to not take losses. You're going to take losses. So you have to mitigate those losses. You have to make them smaller than your winners. We have a myriad of different strategies that we use. Like, we do like a million different things. But generally speaking, most of the time we're looking for trending strategies, like trend following strategies. Both Bitcoin and Ethereum are both trending down on the larger time frame charts, but today they're trending up. So occasionally we will look for a reversion. This would have been like a reversion style trade. That's why when I came in here this morning, I was so adamant about looking for the Fartcoin long. Like, I knew for a fact when I looked at Fartcoin, I wanted to buy Fartcoin, and I wanted to buy it at 24.68. I knew for a fact. The problem is we didn't get the 24.68 entry. It didn't get down there. But that was the trade that I wanted to put on today. And this would have been the target, right? You're making a fresh hive day. So that would have been the situation. We just didn't get the entry. But even then, that would have been a reversion trade, right? So it's different than a trend trade, because in a trend trade, you're looking to take the trade in the direction of the trend. For a reversion trade, you're looking for a pullback off the trend. We were looking to long Fartcoin for a reversion. Fartcoin is so stretched to the downside away from its 21 exponential average. It's going to bounce one of these days, and it's going to bounce big. It's going to bounce huge. It doesn't have to retest the weekly 21, but it will eventually as time goes on. So we were looking for that, or just a spike up or something similar to that. Yeah. They said buying Google was an AI tech play. They thought it was cheap, and they bought in July through September, right? Because $4 billion, they can't just go in and settle a limit buy for $4 billion worth of stock. They have a guy that executes their trades for them on their desk. They told him, start buying. And if we go look at Google, we could probably see that. Started buying in July. So literally, this is why the trend is your friend also. More than likely, whoever they have on their desk to fill their trades, more than likely started buying in July and started adding on 21 EMA tests. They probably bought here. They probably bought there. 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 there and there. Yeah. And they'll probably continue to buy, depending on how much, unless they're done, unless they've got their full size position. But yeah, that doesn't mean they'll be right either. But market conditions aren't really, in my opinion, they still are not situated for like some nasty bear market. So they might be right. They might end up being right on that trade. Only time will tell, right? The VIX is back off. It's back down to the day open. It just bounced, but it just bounced off its day open. So like I said, probably experience some resistance here. Things are getting a little bit out of hand. Bitcoin is it's like struggling at the year open here. I don't know that it will continue to do that, but yeah. Okay, hang on one second. Am I also targeting a certain risk to reward ratio? Yeah, 3-to-1, generally speaking. So I'm generally looking to make $300, and if I'm willing to risk $200, or $100, that's a 2-to-1 risk to reward, or 3-to-1 risk to reward on a daily basis. I'm looking to lose $300 or $100, and I'm looking to make $300 on the trade setup. That's only on the public account. My Forex account is much bigger than $15,000. But on that account, I'm only looking for 2-to-1 risk to rewards because Forex is a little bit more janky and a little bit more difficult. My average on Forex is not as good as targeting crypto. That's why I used to be a lot heavier focused in FX. I started trading crypto in 2020, early 2020, and I really heavily. Like I was involved in Bitcoin much earlier than that, but it was when the bear market started in 2020, when inflation started to go up like crazy and the Fed was going to start cutting interest rates and all that stuff. That's when I started really heavily focusing on crypto because I realized it was a risk-on asset and I definitely wanted to be short. But other than that, yeah, I'm pretty heavily focused crypto nowadays because when you're only putting $15,000 at risk and you're generating nice returns, why stop? If it isn't broke, don't fix it. My accounts are bigger in the regular traditional stock market and Forex markets. However, I can easily rip intraday gains from the crypto market. So, yeah. Yep. I'm basically every trade pretty much the same. Because yeah, you have to, right? You can't look at one trade and be like, I want to risk more on this trade because it's this and that. Because in my experience, they don't always work. You would need a strategy so good. You would have to have a 95% hit ratio to be able to adjust your risk on a percentage basis. So like if you add what is $15,000, what would 1% of that be? That's $150, right? So I'm targeting, I'm risking less than 1% of my total capital allocated per day. But that can be broken up in several different trades because I'm using 20x leverage. So as long as I'm taking $30 stops and not taking more than 3 of those per day, then I am still working within my capital allocation. I'm still, because I know I'm so active that I am going to hit winners as well. There's going to be losers in there, but there's also going to be several winners. And generally those winners smoke the losers, because I can take 3 losses on Ethereum today. I might take 2 winners tomorrow on Fartcoin and Bonk, right? And both of them generate $400 or $500 a piece. Then those 3 losses that I took today will be nothing in comparison. Yeah, I'm trying to answer all of them. There was a bunch of them that came through. Major MicroStrategy bounce, when next resistance to short again. For me, I'm literally buying MicroStrategy. Like, I started Friday. Started putting bids in. I'm not looking for shorts on MicroStrategy anytime soon. I need to see like a 5 or a 6 week bounce. 4 weeks, something like that, then maybe. Because MicroStrategy was oversold on the weekly time frame. I put a couple orders in yesterday. I put a couple orders in Friday. Oh, I've got it. Yeah. It's oversold. It was last week. So maybe a 2 or 3 week bounce. We'll see what happens. But I mean, it's been going down 1, 2, 3, 4, 5, 6 weeks straight. MicroStrategy's been getting killed. Next good place to start looking for potential shorts again on MicroStrategy, $292 up to $304. You might start to see shorts start to stack up at the November open, which would be closer to 264. We just have to wait and see what the market does. Like, I can show you levels of resistance or potential resistance, but I don't know that that level will hold as resistance. You could see sellers start to show back up as early as 219. Because anybody that looks at, like, there's so many different strategies that people use to trade. Like, if they're looking at this as some sort of inefficiency and right there's where they're looking to short, they're going to short. So I don't know where resistance will be. I just know what levels to start looking for resistance, if you get what I'm saying. Yeah, you're well above this week's open and you're well above this week's high. You literally are putting in fresh week highs with every new fresh swing high you put in. So yesterday's high is literally, that was your weekly high right there. So if you look at this on an intraday time frame, you're going to see that you made a fresh week high at 10 a.m. You made a new fresh week high at 10:15, a new fresh high at 10:45, so on and so forth. You are trending higher. So not a good short. Not right here, right now. Your week open would have been a decent place to watch. Right there. But it gapped up above that. So those people's got smoked. Yeah. The next, like, huge place to watch will be the November open. And that's way up there. 264. And you have to be patient too. You can't just be like, he doesn't know what he's talking about. It's going to roll over way before then. We won't know that. We won't know that until we get there. We can't see into the future. So we don't know if weekly levels are going to hold, or will it be monthly levels that hold. We just have to play it by ear and see what's what. Last week's open is way up here. So in theory, you could trade all the way up to 249 and still have done nothing. Right? Get rid of all this stuff. That's where you opened last week. That's your range that you put in last week. So theoretically, you could put a candle like this week and still have done absolutely nothing. Well, in that scenario, next week, when you open, I would be watching that level first, then this level, to see, do you wick up above that and then that? Or do you wick up above that and then fail and then start rolling over? Well, if that's the case, then right there is where you want to look for the short. But it doesn't mean the short will work out, because it could reject that level, trade down to here, and then rip, right? We don't know yet. We got to wait. Down here, definitely not looking for shorts. No way. Like, not after 6 weeks worth of shorts getting paid. Absolute paid. Anybody that shorted right here, they are taking profits. I know if I shorted at 351 down at $200, I'm bailing. I'm taking my money and I'm running. I have to assume other people are doing the same thing. That's a long-term trade, though. You've been in that trade since the end of September. So that's generally what we're trying to do here. We're trying to line up the best trades. This way we can get in them. We don't have to get out of them for a month or two. We're doing great. You know what I mean? Doing great. Take a day trade and it turns in being a whole quarter. Like, I shorted Euro in Q4 of last year. I sat in that trade the entire quarter. Then at the beginning of 2025, January 2025, I took a long. I sat in that trade all quarter. So 3 months, I sat in a long on Euro. Those are the best trades. Those are the ones that make your entire year. When you get in a nice trending scenario like that. The choppy range-bound trades, those are more difficult. They don't last as long. You get stopped out. We just have to wait and see what happens here. Risk markets bounced hard this morning. So the short did not hold. It was trying to hold at 66.18. It didn't work out. It bounced. Now you're tagging Monday's low. That's yesterday's low. Seems to be holding now. But depending on where your intraday VWAP is and a number of other things will determine if you see buy the dip day traders show up. It's an aggressive bounce. You can get aggressive bounces in an elevated VIX environment. The VIX is so elevated up here at $24. This could end up closing down here today. We don't know what's going to happen. But yeah, we'll let MicroStrategy pull up off of these lows a little bit. Let some of this volatility subside. Let volatility shrink. Let the daily ranges start to get smaller and smaller. Then we can look to target fresh shorts. Or if you just think Bitcoin's going to roll over, maybe you should look to potentially buy some puts on like IBIT or something, BIBT today, while you have this pullback happening. It's a very shallow pullback, very shallow correction. It doesn't look like it today. It looks like a gigantic move if you're only looking at 5-minute candles, but if you're looking at daily candles, You still haven't even gotten back up to yesterday's open. Yesterday we opened up at $94,000, 94,182. We haven't even gotten back up there yet. I wouldn't expect us to get back up here if it was going to continue to trend down all week, like it did last week and the week prior. Remember, last week you only had one up day. Tuesday down, Wednesday down, Thursday down, Friday big down. Saturday was an up day, but it didn't even retest Friday's midpoint. The sellers showed right back up. Sunday back down, Monday down. It's been going down quite a lot. We need to let that subside a little bit. But yeah, November's open, maybe, for MicroStrategy. We'll watch what it does once it gets up in there. CoinGlass liquidation map shows major cluster at 97K. Does this align with July's low? Understand that this is an indicator, first and foremost. They aren't looking at legit orders, right? Oh, it brought it up there. I need it down here. They're not looking at legit orders. It's an indicator. So these liquidation levels are theoretical in nature. Like, theoretically, there's a lot of liquidity there. Theoretically, there's a lot of liquidity there. You don't need to look at this to make that theoretical determination. All you need to do is do what Wes did. Pull up an hourly chart and then find your highest hourly swings. Right there's one. Right here's one. Right? You get what I'm saying? And each one of these levels will be huge levels of liquidity. Every single swing high and every single swing low has massive amounts of liquidity setting there. Anybody that shorted yesterday, if they shorted Bitcoin at the open, their stop loss more than likely is setting right above yesterday's high. So Bitcoin really isn't liquidating massive amounts of liquidity until it gets above yesterday's high. It will get intraday swings worth of liquidity, but it's the daily, then weekly, then monthly swings. Those swings have billions of dollars worth of liquidity. So you don't really need that indicator to see where liquidity is. Liquidity is here. Liquidity is here. Liquidity is here, right? Every single swing. That's why we target those levels to sometimes sell into, or sometimes if we're taking out lows, looking to buy, because we're looking for that liquidation break. Just liquidate those levels and then break back up into the range to go look for liquidity in the opposite direction. But it still gives you a pretty good map of what you're looking at. I look at it too. You know what I mean? I'm not saying that it's bad to look at it. It's just, yeah, there's not much liquidity left down here. This is a monthly time frame. But it still works the same way. Like, this is all thin liquidity, no liquidity. Why? Because this push took it all out, right? Right there. Once you broke into this, you smoked all the liquidity that was sitting there. Now this swing is where all the liquidity is. It was until when? Until you pushed under this swing low right here. So you can see how liquidity is just building under every swing low. This is a monthly chart, but each one of these candles are 4-hour candles or hourly candles. Let's see. 2-hour candles. So each one of these candles are 2 hours in time. Yeah, the liquidity is just sitting under all the swing highs and under all the swing lows. When you break through a zone like this, though, what this indicator is good for, when you take out all of that liquidity. So let me outline it in green instead of pink here. When you take out all of this liquidity right here. So once you get down into this, notice how it slows down, like it stops putting in those continuation moves, right? You're not seeing big breakdown candles continue like that. You're putting in wicks and it starts to get choppy and then it trades sideways because it's building. People are building liquidity up. As this time goes on, people are taking orders and setting stops. That's your liquidity. So like these people here, when this swing happened and then you got this bullish move right there, these people were buying in here, setting stops right here. So then when this happened, it liquidated all those people and then you got a bounce. Now the liquidity's here. What this indicator is good for is once you do that, once you take out all that liquidity, if you see expansions continuing even after, that is fearful selling. Okay? When that liquidity is being smoked and you're still pushing down, there's really no more liquidity, but price is continuing to go, you need to stop and do not buy those swing lows because there really isn't any liquidity down there, but price is still falling. That means people are selling faster than price can even build up liquidity. That's fearful selling, and you need to not buy. You need to just step back and wait for a range to build, because until you build up a range again and let this liquidity grow under these swings, you know what I'm saying? Then you can maybe look to be a buyer or wait for a liquidation on the top swing. If you're trending down, wait for the liquidity breaks up here and aim for the downside trade, because that's the trend. It's just, you do not want to buy when price is failing. It's just breaking down and down and down and there is no liquidity, because that means people are literally hitting the sell button quicker than the buyers can pick it up. It's like fearful selling. You never want to step in front of that because it can keep falling. That happened back in April. Actually, it was before April. It was right in through here. Right through here. So once we broke down, here, let's go to here. So once we broke down through that liquidity, there was no real liquidity in here. There is still some, of course. You've got people that are trailing stops higher as price expands upward, but the mass amount of liquidity was gone. We were looking at the indicator map and literally on this day, there was no more liquidity. So what happens is retail will step in front of this and start buying it. They'll start buying it because they think price has to go back up and it has to come back up here and get this liquidity first. Well, not if you're seeing fearful selling. Right? When you're seeing fearful selling, you'll get massive moves lower. Like that and that and that. Like, that's fearful selling. 85 down to 82. Like, that's a $3,000 swing that happened in just a couple hours. You don't want to be trying to buy when that's happening. That's what that indicator is good for. It'll show you when people are really afraid out there and they're just getting out. They're so afraid they don't want to be even holding long trades anymore. But yeah, so like that's the reason also, like knowing where the liquidity is. That's also why I'm not trying to force this short right here. If I was right on my short direction on XMR, if it was going to continue lower, it would have been looking to make fresh weekly lows because that's where the majority of the liquidity is. Then it would have rolled over. But since it's above my level, I don't want to keep forcefully trying to sell it because I know more than likely if it continues to push, they're coming to smoke this liquidity. So there's no reason for me to enter a short anywhere inside of this 4-hour range. Right? If you find yourself looking at the small time frame charts, and this is the level that you want to short, price rejected there, but then came back. You don't want to short this 5-minute candle, then this 5-minute candle, then that 5-minute candle, because you're going to lose a lot of money and you're already wrong. You took the stop already. So the market's already telling you, no, I'm not going down. I want to go up. There's liquidity up here I want, and up here. That's what I want. That's the market telling you to stop shorting. You're wrong. Don't just keep, thinking, well, it's supposed to roll over at this level. No, it's not. We're not taking the short because we think it is going to roll over. We're taking the short just in case it does roll over. We don't want to short it if it's going up because we're wrong. We want to be setting in short positions while price is dropping, not moving higher. It'll just help you conserve some of your capital, because I know a lot of retail does try to force the trade. I did it. I did it for years because I didn't understand why it wasn't working. I kept constantly thinking to myself, well, it's supposed to go down there, but it's not. It's going to go down now, or now, or now. And then just constantly stop after stop after stop. Don't do that. Price is likely 200 and under. Oh, I don't know what you're talking about. Oh, Google. You guys are talking about Google. All right, got that. Okay, so yeah, you just mostly you guys talking one another. Okay. Do you watch Zen low cap privacy play up 15% today? Is that a crypto or a stock? Let me type in Zen. Right now, Zen, it might have been up 15% when you wrote that comment. Right now, it's only up 4%. Let's go look at it. I only trade, when it comes to crypto, I only trade assets that have at least 1 million in traded volume in a 24-hour period. So that's the first thing I look at when I'm looking to trade an alt. So if I type in Zen, it's here. So it's in a 24-hour period, right? it's traded 273 million tokens. So yes, there's plenty of liquidity in this. I can trade it. When you get under the 1 million mark, when you're like setting at like 200,000 tokens traded, it's hard to get fills. You can take a position and it'll only fill a little bit of it. And then, price has to keep going through your order. It could take, several attempts to get a full fill. And that's on a very small position. Like I'm talking $100 position size. I don't like trading those kind of assets. A, because they move a lot faster, generally speaking, and it makes it a little bit more difficult to mitigate risk. If you take, like, on these big movers, for instance, let's delete Zen. But yes, I will trade anything that has over 1 million traded tokens. This one right here is only traded 600,000. It's up 74%, but I wouldn't trade it. I wouldn't trade it. It's a very low float asset. Very few traders involved in this. I want millions of people trading it, not just 20 people trading it. The more volume there is, the more then I would trade it. The next thing that I look at, I do trade these big movers because there's a ton of opportunity in these things. So for instance, if you would have shorted right here just because that's the 4-hour close, and sometimes I'll take shorts based on just that info, right? That's the 4-hour close. So if price fails to go above that, I'll take a short. Well, if you did that and you sat in this trade for 4 hours, you potentially made 15% to the downside. That's a huge return on investment or return on equity. A 15% return is, yes, absolutely, I'll take that. You know what I mean? So these big movers, they have potential opportunity in them. But first, they have to have over 1 million traded. Right here, 24-hour volume, over 1 million. And the funding rate also needs to be situated for whatever side of the trade I'm looking at. If I'm looking at a long, then I would rather this funding rate be paying longs. If I'm looking for a short, then I would rather the funding rate be paying shorts. Occasionally, you'll find a big mover like this that will be, it'll literally be so bullish because the funding rate is paying like 0.5 every hour. So that literally means if you're just setting in a long, if there's a negative here, if there's a negative 0.5, then you don't want to short that because people are buying it just to make the funding rate. So you can jump in there with a lot of money, and if price goes in your direction, you're going to make money on the upside as well as get paid a funding rate every hour. So the funding rate needs to be normal, and normal means 0.0 or 0.00. That's normal. 0.1 or higher, I'm probably not even going to trade it unless I can get on the right side of funding. So like this is a short. It's paying, longs have to pay shorts. And there's 2 hours left on this 4-hour candle. 2 hours, 46 minutes. So it's every 4 hours, potentially, the funding is. So the sellers are getting paid to hold shorts on this asset, but they're not getting paid a lot. So in this scenario, the funding is not influencing market direction. So always how much volume is in the asset? And then second, what's the funding rate? Is it situated to pay longs or shorts? Then you can look to see, well, it's paying shorts. So if resistance holds like this, so if you go down into the 5-minute chart and watch, so that's trade talk taking a short right here at 4-hour resistance because there's 1 million tokens traded and the funding rate is paying sellers. So if I last long enough through here, I take the short, I don't get stopped out, price goes in my direction. Now I'm making money because I'm right on direction. And secondly, if it goes into a period of sideways trading like this, then I'll get paid funding every 4 hours or every hour. I took a $36 position one time on an asset that it was paying the longs 2%. I traded it. I opened a position with like $50 of my money. I ended up making $200 just in funding fees. So my unrealized P&L by the time I got stopped out, I made $200 in just funding fees. So I made, if I opened the position with $50, I made a 200% return on an equity, and price just did this the entire time. It just went sideways. So I snuck out with my $200 and left. And all I did was open the position and left it open. So those things matter to me when I'm trading. It's not just, is it a setup or not? There's other factors, of course, but I can teach you what to look for, what not to look for, but it'll be up to you to manage your risk. But yeah, I would trade anything that's moving. Absolutely. That's my job. My job is to grow my money. And the only way I can do that is if the asset is moving. It needs to move. Or if it's not moving, does the funding rate pay me? If that's the case, then I will take the trade. Because I'm still setting a stop loss. I'm still only going to lose such and such amount of money if I'm wrong. If price just dumps, if I'm long or if I'm short and it explodes to the upside. I'm never just setting in a trade without my stop mitigated. That was that. Yep, that was that. So yeah, Berkshire had tons of money parked getting in. Yeah, they $300 billion on the side. Dell hammered pretty hard and at good support. Dell. Let's look. So we're already broken down below last month's low. Yeah, potentially. It's at a potential support. It's going to be September's open. So as long as sellers can't push it lower than that, then you could say this is potential support. But you have to figure out, where do you want to say, okay, no longer do I want to be long. I would probably say right there. If price is under that, then the next potential liquidation from a monthly swing is all the way down to here. So I don't want to hold longs at 118 knowing the downside target could potentially be 106. So the only way I could buy that is if that price holds. And you're getting a slight bounce from there today, but this is a lot of momentum. You're oversold down here, so yeah, it could potentially bounce. But that's still a lot of momentum coming down to the support. So you need to let momentum subside a bit. Let momentum decrease. Let it trade sideways for several days and see if this level holds. If it does, then you could potentially look to buy it. And don't worry about missing it, because you don't want to buy it if it's going to roll over in a day or two and just continue pushing on lows, you want to buy it when you see an obvious support level holding. So like you're under all the major moving averages here. So it couldn't find support at very many support levels. So you blasted through that weekly support with not even looking back. You filled that gap and that didn't stop. You blasted through this, you gapped down. Now imagine the poor people that bought right there at 132 last week. Imagine the people that bought this on Friday. They came out to the market yesterday, and as soon as the market opened, regardless of where their stop was, they got filled at open at 124. That's slippage. You got to be careful. Because you might have had your stop setting at 129, and that might have been 50% of your account. And then it gapped down to here and blowed your account. You just got to mitigate risk. Most people would be successful in this game if they would just mitigate risk. And that's just simply throwing darts at a dartboard and seeing what sticks. You would literally be successful if you just quit gambling. I mean, it's a proven fact. They've proven it time and time again. You got the turtle traders, read about them. A couple guys, professional traders, turned a bunch of not people that never traded ever in their lives into professional traders that made millions of dollars. How? They were managing risk. And they were doing the easy strategies. They were buying 52-week highs and selling 52-week lows. Like, hello. You can't get any easier as far as strategy goes. Are you making fresh 52-week lows? Yes. Sell it. Are you making fresh 52-week highs? Yes. Buy it. And they became extremely profitable. It's about managing risk. Managing your expectations. Understand that you do not know what price is going to do. So manage your expectations, manage your risk, and you will be successful. You will nail a couple really, really good winners that will make your entire year, entire life, maybe. But yeah, just manage your expectations, manage your risk. That's the one I just read. Event, seconds chart swings, event. Oh, you're trying to say even second chart swings have liquidity. Yes. So even if you're looking at this, what Wes is saying, if you're looking at a 1 second chart, yes, every swing low has liquidity under it. Every swing high has liquidity above it. Every swing. The thing that is making this market tick up and down like this are orders being filled. If orders are not being filled, you will get a chart that looks like this. Well, here, let me change it to just like this. You will get a chart that looks like this. Right? That is very thin liquidity. This right here, even this stuff, it's a 1 second chart. So, but even this stuff, this is liquidity providers. These are liquidity providers moving the market. They have algos that are sending bids in, sending sells in. They're operating on the spread. So whenever you see that, you stay away. If you're seeing that happen on a 5-minute chart or a 1-minute chart, you stay away from it. Because the only person that's trading it is liquidity providers. Unless it's got a super heavy float, like a Ford. Like, have you ever looked at intraday price action on Ford? You see these candles? This is liquidity providers trading against themselves. This is nothing. It's nothing. This is garbage here. You don't want to trade this. There's not enough volume to even give a full-size candle. There's so many billions of shares on the float. A person can come in and buy $100 million worth of Ford and it wouldn't even budge. Price wouldn't even budge. It's too much. Yeah, it's just leave this garbage alone. But yeah, technically speaking, every single swing high, swing low, that's where liquidity rests. That's where it's sitting. If you bought here, your stop is there. If you bought there, your stop is there. Right? You sold here, your stop is there. Or here. You sold right there, there's your stop. You're stopped. It's not market makers targeting your stops like everybody thinks. It's just the market looking for liquidity. It's not market makers looking for liquidity. They're putting the orders out there so you can be filled. That's why it trades back and forth, back and forth, back and forth, back and forth. They're hitting the bid and the ask. Bid, ask, bid, ask, bid, ask, bid, ask. This so you can get in and then get out 1 second later. If there wasn't liquidity providers doing that, you wouldn't be able to get out. Low float penny stocks, they're the world's worst. I've seen people buy. I've bought low float penny stocks before. Price immediately dumped under where I bought it, and then there was no more buyers. The buying dried up. I literally sent my order to sell 1,000 shares because that's what I bought, and I ended up owning those shares for months. Nobody was buying. I'm selling, but nobody's buying. Everybody's selling. There's only selling, no buyers. When that happens, you're stuck. You're stuck with those shares until a news break or until volatility comes or until volume comes back into the asset. And then they will fill who's ever in front of you on the order book. So if you're setting on there on the ask with 1,000 shares, if no one hits the bid at that price, you don't get filled. They fill whoever's in front of you. You can be literally stuck in an asset forever, theoretically speaking. That happens with options too. You try to fill option orders instantly, they don't get filled. It's because there's nobody on the bid or ask. There's nobody on the other side of your trade. No liquidity providers. If there is no liquidity providers, you're not going to get filled unless Tom or Jerry or Bob wants to buy the 1,000 shares you are selling. That's the only way you get out. Be careful buying stuff like that. Stay away from no liquidity. Stay away from it. Stay away. All right, Jesse Livermore, and I'm sure you probably heard this, but he used to say, I always made more in the city than I did in trading. I always made more in the city than I did in the trading. I'm not sure what that means. I know Jesse Livermore died broke. Jesse Livermore was a gambler, I think, more than a trader. He did good. He made millions, but he also lost millions. That, in my opinion, like what I'm about to say is going to offend some people, but in my opinion, that is not a good trader. That's not even a good gambler. If you make billions in the market and you die broke, you're not a good trader. Anybody can make billions in the market if they get lucky enough. If you buy 1,000 shares of a stock and that company only goes up and up and up and then does 10 splits, you're going to be a multimillionaire, right? You're going to own thousands of shares at exorbitant prices. You're going to make billions. It's the people that keep that money. Those are the ones that are good traders. When you make consistent withdrawals, that's what makes a good trader. Someone who pays themselves on the regular, every week, every month, every year, right? Those are the good traders. Those are the ones that are making the money and then keeping the money, building wealth. Those are the people you should follow, not people that make it, lose it, make it, lose it, make it, lose it. That's terrible trading. That's what retail does. How much money did you make when Bitcoin went up? A lot. How much did you lose when it went down? All of it. Got it. Good. That's the same thing Jesse Livermore did. They wrote books about him because when he was up big, right? That's why he got famous. He would bet huge and win huge. But he also lost huge when he was wrong. He probably, I think he kept his house and a few things like that. So in theory, yeah, he did good. But it's not good trading to lose it all. You want to keep it. Make it, take it. Then make it again. Take it again. Make it again, take it again. The only way you can do that is if you mitigate risk. Yeah. And then Wes just said what he said right under that. So yes, exactly. That doesn't make a good trader. Read about the people who made a lot of money and kept it. Those are the people that you should learn from. Like even investors, it doesn't necessarily have to be traders. Just learn about managing money. Because you got investors that do the same thing. They're just not trading the markets, but they are they're buying companies before the companies get big, before they blow up, right? They're basically just buying shares of the company, and then the company does really good in the future, and then they sell their shares. Like Elon started as nobody, right? He went to college, came out broke. Built a company. What was that company called? It was PayPal. Well, then ended up making how many millions of dollars because of the company he helped build? He sold all of his shares, or a huge portion of his shares of the company. That was his first chunk of change. Then he went and invested the majority of that money into Tesla, and then built Tesla into a multi-billion-dollar corporation. He's made strategic bets throughout his life that have all paid off, literally. That is someone to focus on if you're trying to build wealth. He's literally competing for the top richest person in the world every week. He's worth $400 or $500 billion. It's insane. We're probably going to see the world's first trillionaire is going to happen if these markets keep doing what they're doing. But it's obviously because of inflation too, right? $1 billion back in the 50s is not equal to $1 billion today. So that's another reason why we can't look back in history and say, well, Carnegie might have been the world's richest man. There just wasn't any way back then to collect that data. No one really knows. Or the steel guy, right? The guy that built all the railroads and that built America. Those are the people that really built the economy we still live in. Those people's back in the 1800s, turn of the century, 1900s, 1940s, they built this world. And they built it on the back of oil. Until we find something better, it's going to keep having to be pumped. That Landman show is so good. So true. But yeah, focus on the people that made a lot and kept it and are worth a fortune, or at least doing good in their life. At least okay. Not someone who blows everything. That's terrible. Qualcomm hammered. Is it? Software. Software is probably going to get hammered if AI continues to write better software. I think these companies will do good eventually. They just need to figure out how. They need to research and develop new ideas to compete in this new market. But if you only focus on software with AI making better software, you're probably going to get beat up in the market. It seems to be getting beat up pretty good here. 208, that's just from the last swing. This had to be news or something, right? That day candle is so much bigger than all the other day candles. So something went on here. Something caused a chaotic move. Some kind of news or something. Yeah, and it happened not long after the bell. That's insane. Yeah, I don't know what that was, but that happened during normal trading hours. So that had to be a news break. Big news. Caused a buying frenzy. Yeah, they're not doing it. It's back down. It's off of its highs. Pretty good. I don't know about enough of what they do, but you're only down 30%. There's other companies that are down a lot worse than that. But we'll see. Yeah, they're down. I haven't taken a position in Qualcomm in so long. I do have it on watch. This company right here is one that I'm interested in buying once we liquidate those lows, maybe. Those are long-term lows that look like they're headed for it. This thing has been massively oversold too. Like, this is some massive bullish divergence. I don't know that I would call that divergence because you completely busted way back above the 50. That's played out. But you have divergence here even from this swing to where you are now. You do have a tad bit of bullish divergence in here. I don't know that that's going to cause people to buy this, but we looked at this the other day when we were just doing the private stream. And your analyst rating here is, out of 43 analysts, 21 say it's a strong buy, 4 say it's a buy, 13 say it's a hold. There's only 5 out of 43 that say you should sell your shares. So the majority is heavily equal to buy and hold this stock. This is called The Trade Desk. I don't know why they got killed the last couple years. I don't know why. And it may continue. Oh, it's only been this year. So something went on there. They got on the wrong side of the market or something. Maybe they had a huge short position on risk markets going into 2025, and maybe that's what's caused this. But you can see it's getting ready to liquidate levels that haven't been seen. So they're going to work on it eventually. I mean, massive, crazy swings here, but once we get down in here, I'd be willing to put on a few of these shares myself. Not going to go in and buy it up heavy, like 1 million shares with 6x leverage. I'm just talking about adding it to long-term portfolio. Potentially just pick up, 10, 15 shares of it, 20 shares, 100, whatever you can afford, and just set on it and wait and see. But make sure you have a stop loss also. Figure out how much of that you're willing to lose, and then make sure you set a stop loss just in case it keeps going lower. Also, might want to do a little bit of background research and find out what what took place. Like, you guys were doing so good, and then this year, what happened? Right? Find out what that was, and have they taken steps to fix that? If so, pick it up. There's a couple of them like that we're looking at. Probably not this one. I don't remember why I did this, but yeah, this one is not oversold. Was it the analyst rating? Yeah, analyst ratings say it's a buy too. Only 4 analysts. That's not. Never mind. Get rid of that one. Take that one off watch. That one needs to go back down. But there was a couple of them that I looked at yesterday that I wanted to buy. Home Depot's getting there. It's not there yet. Deckers. Uh, 28 analysts. Oh, right there, Deckers Outdoor Corporation. 11 say strong buy, 4 buy, 11 buy and hold. It doesn't say buy and hold, but you have to buy it to hold it. You know what I mean? But I guess this means if you don't own it, don't do anything. Probably. But only 2 say it's a sell, and one sell, 1 strong sell. Don't know if it's worth anything, but it used to have a good looking chart. I mean, that's a company I would invest in before the free fall. They put in long-term growth. Long-term growth. You're almost 50% off, over 50% off, yeah. Once you get down to 66%, you're at 2/3. And once you get down to 66%, you're off 2/3. You've lost 2/3 of your value. That's pretty decent time to look to invest, but only if the chart looks good long term. And only if they figure out what caused the problems. Like, this thing is getting so freaking overdone, it's gonna have to bounce eventually, right? In phase energy? I guess not. There's a neutral rating here. Long, a lot of people strong sell still, 8. So this is neutral still. They haven't got their stuff together just yet. These two, never mind. I would buy O'Reilly if it gets ever to the weekly oversold. That rarely happens unless a full-on bear market happens. You rarely see this thing get down into oversold levels, guys. It used to a long time ago. Back in the 90s, you got oversold. 06, you hit oversold. 07, 08, of course, the financial ruin. GFC, you got oversold in 2017. That's random. And then again for the pandemic. But since the pandemic, you have not even gotten to oversold. So right there, 40. If we could get there, I would start adding this. That's O'Reilly. This one is a more of a speculative driven play for me, the metals company. I want to see it at least get back to 4. You may build in a support here though. It's more of a speculation because we don't know that we know that they're going to be set to be one of the top miners or one of the top people to pull those magic rocks off the ocean floor. We'll see if this asset can find support at some point. And then I will add that one. Not those. Those are gold miners. They need to pull back a ton. I don't love Carvana. Too many people short report that thing. The owner of the company is a little sketchy according to some short reports. But this thing never did really anything. I thought there was a couple. Oh, Colgate Palmolive. This is probably a buy down here. Yep. Your technicals and your analyst ratings say you should buy this. You got 10 say it's a strong buy, 2 buy, 10 buy and hold, and then 1 strong sell. Potential upside 20%. That's max potential. That's only 1 year though. That's a 1 year forecast. So even with the minimum is 78. So this might be something to buy for long-term hold. Coinbase has got room to go to the downside. Capital One, if there's a credit crunch or a credit crisis, you don't want to hold any credit companies. This is a good company to buy and hold because look at this chart. I mean, this is one of the best looking charts I have ever seen in my life. Now, maybe their growth is done. Maybe they've grown as big as they can grow. I don't know. I know what this company is. I see their trucks all over the place, or I used to anyway. They are a uniform company. They make uniforms for a bunch of employers. Like if they do washing and uniform cleaning and uniform making. And they obviously got a lot of contracts. To be specific. Good looking chart. It's in a long-term chop zone here. I like that. What I want to know is, does it build in support, or are we looking to wait for the oversold tag? Looks like it's looking to at least at the very minimum liquidate. You already did that. You've already liquidated and it's back into support. So actually, this is probably getting close to a buy. I don't know though. It's only Tuesday. Not really. I mean, you've been seeing lots of volume since it sold off. I'll see what it does this week. I give it a little bit more time. Good company though. It's neutral on the analyst rating. 14 people say hold. 6 strong buys, 1 strong sell. Yeah, there are tons of opportunities out there. You just have to find them. This one, not so much, because this one's actually in an area that could ultimately end up seeing more, experiencing another leg lower. Yeah, it's trade. See, like this is where we would potentially be looking for another short op on it. So maybe wait for another, maybe wait for a 40 tag or something. But they're a tractor company. I mean, Disney, I don't know. I don't love Disney anymore. I used to love them, but I don't anymore. They've been an underperformer for a while now. Yeah, once again, this, I don't know why Elf is getting beat up so bad. Other beauty companies are not taking that big of a hit. There's Ford. Fastenal. This is another company that I will absolutely be interested in buying, because this is another chart that looks absolutely delightful. That is a good looking corporation. So yeah, let it pull back. Let it pull back. It's pulling back to pretty split levels. Nice. You're already under pretty split levels. So this might be like, I might not buy it if we're pushing on fresh week lows this week, or if we're pushing on fresh week lows next week. But if it can defend 39 bucks, maybe. It's not off that much though, because of the split. You're not even down. Yeah, you're barely down. So maybe wait for it to come off a little bit more. Like I said, you would need a bear market in some cases to push a lot of these down further. I don't even know what that is. Johnson & Johnson just absolutely tearing. A lot of accumulation happened on this right at about 40. I mean, Lululemon, will they ever get back to pandemic levels? Well, yeah, maybe. They did it in 2023. I remember they were blowing up during the pandemic. But not really very much value up there. This actually did hit oversold, deeper than oversold. So the fact that it still wants to push in, this might be a YOLO trade. Let's look at this. We're going to wrap this up real quick, but let's look at this on the options market. This could be a YOLO trade. You got earnings coming up next week, 2 weeks from now. And the clear stop loss is right there for many, many weeks. So when we get closer to earnings, damn, I want to set an alert. I guess I can set the alert here. Didn't work. I want to keep this on watch. This might be... The options on this thing are expensive, but they might not be that expensive if we get them on the day of. Asia business for expansion? Can you talk Asian women into buying Lululemon pants? I don't know. We'll see. Yeah, this might be a YOLO play, but it's got to get closer to earnings because it may just range bound. It might trade range bound here until you get to earnings. Then you might see that liquidity run. Then we could buy 170 strike calls or something. But it's a YOLO play. You only live once. It's a straight up gamble. It's a bet. So you're basically what you're going to do is you're going to buy an out of the money call option just before they give out earnings, and then whatever happens, right? That's what a YOLO trade is. But we'll see what happens when it gets closer to earnings. It's too far away to be talking about YOLO yet. MasterCard, McDonald's, no. Cloudflare. Yeah, software getting beat up here the last 3 weeks. The other software company we looked at was also getting beat up. Be careful on software. Here, I got a software sector. I have a software watch list. The Cloudflare last 3 weeks got beat up. Amazon last 3 weeks got beat up. Oracle, last 6 weeks been beat up. CrowdStrike, 3 weeks down. Palo Alto, 3 weeks down. Zscaler, 3 weeks down. Snowflake, 3 weeks down. CRM Salesforce, they're down and have been down for a while here. Maybe at 200 on Salesforce. Workday, ServiceNow, last 4 weeks, and then Avgo. It's doing okay this week. Broadcom. But that thing has been on an absolute tear. So that's software. Okay, capital expenditures, the same reason Facebook and Oracle are getting hammered. Sudden change in CFO and downgrade by a major bank. Good. Let it get oversold and I'll pick some up for sure. All right, we're going to wrap this up. You guys have a fantastic rest of your day. We'll see you on Thursday morning. Make sure you trade safe, trade smart, and as always, happy trading, everybody.